Cedar, what are you doing? You said it, not me.
Hey guys, so at first I was not going to make a video on this topic because really it had nothing to do with investing, but as it's played out and we are witnessing the absolute dystopian reality that is happening in the stock market right now with regard to GameStop stock, I thought that I would be remiss as Mrs. Invest if I did not make a video on this topic. I'm going to explain how this fiasco with GameStop stock all started, what happened this week, where we are now in the weekend at the end of this trading week, how I think this is all going to end, and my thoughts on what this has brought to light about the situation with the stock market in general. I think it's going to be a good one. I think I'm probably going to get a little bit fired up, so fair warning, you're going to see fired up Mrs. Invest. Let's get right into the video. So how on earth did this whole thing start? Well, it goes back to 2019. There's a user on Reddit on the forum Wall Street Bets, and his name is Deep Effing Value. Let's just call him Deep Value. He started buying GameStop stock in 2019 when it was trading for about $5 a share. And all through 2019 and up through 2020, he continued buying GameStop stock. And then in July of 2020, he posted a video on YouTube basically explaining his reasoning why the stock was unjustifiably beaten down and that he was bullish on the stock price.
Some people won't even tune into the stream right now when they hear that I'm bullish on GameStop. At the current price point, it's trading about $4 right now, $260 million market cap. I'm also hoping maybe you can catch some of my blind spots if I have some. Poke some holes in my thesis and share it with me, because yeah, I think everyone else is crazy and I think I'm right, but I've been wrong plenty of times in the past. So
he explained in this video that the company, once you dug through the financials, they were actually in a pretty good financial position to be poised for a comeback.
It's July 2020 right now, and I'm bullish on GameStop at the current price point of about $4 per share.
And he didn't really understand the whole negative sentiment around the stock and why the price was so low. The company had a lot of cash on hand, which was good. It was transitioning to online retail, which is obviously necessary in 2020, and it was becoming less unprofitable, all good things. And throughout the video, he went on to explain that this stock had such a negative sentiment towards it in the investor community. Everybody had basically dismissed the stock as a stock and a company that was going bankrupt due to everything that happened in 2020. And he was digging through the financial statements to basically explain in this video that he thought there was opportunity in this stock. He also talked about how short interest in GameStop stock was really high, over 100%, meaning that more people are shorting the stock than there are actually shares available to buy, which is a pretty dangerous scenario for the people shorting the stock because it can set them up for a short squeeze.
Things kind of feel like they're changing a little bit, and because if the chart does change a bit and it starts to look more bullish, you get other people who are piling into it as well, not just the longer term fundamentals focused people. That's why I kind of look at this stuff, because I know other people are too, and if that chart turns, just people could start piling on. And then you get the short interest too. I didn't want to go into, hopefully it's clear the short interest isn't a main point to this thesis, but you need to acknowledge it. It's out there. Could it be unwound in a systematic manner so that nothing happens? Yeah, probably. I'm not betting on a short squeeze, but it seems like something where it could take place. But it would be nice if it goes up really quickly. But when you see all this stuff kind of adding up, you need to at least consider it, take it into consideration.
And looking back, this comment is honestly legendary because this guy literally predicted what was going to happen in the future. And at the time, everybody thought he was crazy and didn't know what he was talking about. So it's really funny to watch this in hindsight, but if you were watching it at the time, you probably wouldn't have thought much of his comments. And so, like any normal person would do when they think they found the next banger, he opened up Reddit and posted his thesis onto the subreddit Wall Street Bets. Now, Wall Street Bets is a subreddit dedicated to highly speculative trading strategies and very risky deep value plays, hence his name, Deep Value. Most people would not consider what happens on this subreddit to be investing. I don't even know what you call it, speculation, gambling, whatever. But anyways, he posted his thesis on GameStop on Wall Street Bets. Definitely a lot of people have made a lot of money, life-changing amounts of money, generational wealth amounts of money using these highly speculative speculative plays, but even more people have lost a lot of money. So that's really what this subreddit is all about. It's about speculation and very risky strategies. Now, just to be clear here, his whole thesis was that GameStop stock was a good stock to buy because it was in a good financial position to recover and hence increase the stock price. He said that the short interest and short squeeze was a possibility, but that wasn't really his main reason for investing in the stock. But the key thing that he picked out with GameStop stock in July of 2020 that he shared in his video, and I'll link his video down below if you're interested, was that the short interest on GameStop stock was over 100%, meaning that more people were shorting the stock than there were shares to buy. So all these people borrowing shares to short the stock exceeded the amount of total shares that were available in the float to buy. Also, he noticed that the stock was very micro cap, meaning that the valuation of the company was very low, and so it could be easily manipulated if a couple people went in with millions of dollars. And also, he noticed that the stock was basically dismissed overall as a company that was headed for bankruptcy, and nobody was investing their money into it. So this created sort of the perfect conditions and the perfect storm to create a mega short squeeze. And honestly, this is pretty impressive of him to notice at the time, and I'm just like, good job, I'm impressed. Smart man. So let me explain what all of this means in really simple terms using an analogy. So instead of the stock market, pretend it is a rainforest and you are a monkey. You have 10 bananas and the going rate for 10 bananas is $10 or $1 per banana. A wild pig comes up to you and says, hey monkey, can I borrow your bananas and I'll return them to you eventually. And the wild pig is doing this because he thinks that the bananas are overpriced right now and pretty soon the price of the bananas is going to go down. So once that price goes down, he can then return them to you, force you to accept a lower price for the bananas, and then profit the difference. This is basically what shorting is. But all you monkeys in the rainforest are very smart, and you notice something. You notice that there are a shortage of bananas overall in the rainforest. And so because you're monkeys and you're very smart, you start gathering up all the bananas so that there are no other bananas left to buy. And what this does, this creates the situation where when eventually it comes time for those wild pigs to return their bananas to you, you now control all the bananas in the rainforest and you determine the price that you are willing to accept for the return of your bananas. And obviously you're going to ask for a higher price. So you could set the price to infinity or you could set the price to whatever you want because the pigs have to return the bananas to you eventually and pay you the price that you are willing to accept. This is called a short squeeze. And in this situation, the monkeys are in the power position. They are in control because they control the price that they are willing to accept for return of their bananas. But this is only possible because they noticed that there weren't a lot of bananas around to buy and they bought up all the bananas, leaving the wild pigs with no choice but to be at their mercy in determining the new price of bananas. And since the wild pigs borrowed their bananas and didn't buy them from them, they have to return them ultimately, and this is called closing your short position. And this was exactly the case with GameStop stock and what Deep Value noted in July 2020. Because the short interest was so high at over 100% and the shares shorted were greater than the number of shares available to buy, and this created the perfect storm for a massive short squeeze where the people who actually own the stock can start asking for astronomical prices from the people trying to close out their short positions, forcing the shorts to buy the stock at much higher prices, driving the stock price up really quickly. So who was shorting GameStop stock and why was this whole thing so explosive, generating so much media attention? This is not the first time in history that a stock has been shorted. Well, enter the hedge funds. Hedge funds are basically large institutions that control billions of dollars, and they are able to trade using fancier and more complex strategies for their investors, and that includes shorting stocks. The thing about hedge funds is because they have billions of dollars, they have so much bullying power in the stock market. Imagine entering a stock with $1 billion. You could single-handedly move that stock however you wanted. And hedge funds are often called market makers or market manipulators because they do this exact thing all the time. They know that they have this power and they regularly exploit this for their own personal gain. They are quite literally the bullies of the stock market. Us as the average Joe or average Jill, whatever you want to call us, are called retail investors, and we are like the Toyota Priuses driving on the highway, and they are like the 18-wheeler that is riding your tail behind you, forcing you to get out of the lane. They don't care if they mow you down because they know that they will survive and they'll just get to their destination faster. And the filthy rich have often gotten filthier richer during these times of crisis, because while companies are facing financial difficulties and stock prices are going down, they'll often short stocks and rinse and repeat the same cycle to profit and turn their billions even into more billions at the expense of so many other people, so many other businesses, and us as retail investors. So there's a largely negative sentiment towards hedge funds for this very reason. I mean, just look at this video of hedge fund CEO Leon Cooperman and what he thinks about us retail investors.
The reason the market is doing what it's doing is people are sitting at home getting the checks from the government, okay? And this fair share is a bullshit concept. It's just a way of attacking wealthy people. And, you know, I think it's inappropriate. We all got to work together and pull together.
Yeah, we're just sitting on the couch collecting government checks. I mean, I am sitting on a couch, but this kind of bullying behavior is called market manipulation, and they do this all the time and they get away with it. It should be illegal, but I don't know, I guess they have enough money to pay off the people who are in charge of regulating the markets. And us as retail investors can't do anything about it because at the end of the day, it's a numbers game. They have billions and we don't, so they can move the markets and do whatever they want with them to profit off of it. And Robert Reich on Twitter typed this out really nicely, called the Wall Street formula, which is where they short a stock, they drive the price of the stock down, thereby killing us small investors who are actually invested in the stock because now the price has gone down. And then when the stock is cheap, they buy it and enjoy the rebound in the stock price. They liquidate their position, they cash out, they pay their capital gains tax, and they repeat on the next one. And imagine doing this with billions of dollars. Like, they're making a lot of money doing this and they're hurting a lot of other people in the process, but they don't care. Okay, so back to GameStop. Now by this point, momentum was building on Wall Street bets about the fact that the stock had over 100% short interest, and people were starting to pour in and start buying the stock. And there were people invested in the stock with $15, and there were people who were millionaires going into this stock because it started almost a movement. These people who are invested with $15 and people who are invested with millions are kind of standing hand in hand in this weird metaphorical unified wall to stick it to the hedge funds. And I don't even know, it's like kind of poetic, like I don't even know what to say about it, but the whole sentiment about buying up all the shares of GameStop was to basically screw over the hedge funds. And this just kept going on. More and more people were buying into GameStop stock. And then Elon Musk on January 26 tweeted GameStonk, which absolutely sent the stock completely through the roof, explosive. Everybody starting buying up all the shares, and then started getting media attention, and more people started piling in, buying the stock, driving up the stock price further. And the hedge funds at this point are literally just crying wolf. The thing with shorting is when you short a stock, you understand that there is a very real possibility that somebody could come in there, buy up all the shares, and squeeze you out. This is a legitimate risk you take when you short a stock. They know this, everybody knows this. This is like the ABCs of shorting a stock. So they're crying wolf about something that was a legitimate risk they knew was possible when they shorted the stock. Everything that has happened to them is completely legal, and it's a risk they took, and a risk in this case that they lost. But now they're crying manipulation because the people have rallied together against them on Reddit to buy the stock. But people rallying together to buy a stock is very legal. People can buy whatever they want to buy. So it's a little bit ridiculous, I think, for them to be crying out injustice. And The people that they say are just sitting at home on the couch collecting government checks have literally beat them at their own game. So now the hedge funds are in panic mode because they want to close out this short position, but the stock has now rallied to over $300 a share. And if they close out their position at over $300 a share, they're going to lose billions of dollars. And I think one of the reasons why this has become such a powerful event for the average retail investor is because now the people are in control for once, after we have been bullied by these hedge funds, just with them having their way with the markets due to their size. And the hedge funds are like, they couldn't even imagine that some peasants on Reddit, myself included in the peasant category, could have played them at their own game. I could be wrong, but I don't think this has ever happened before, where a bunch of average people have band together to buy a stock to basically screw a hedge fund out of their short position. I think this is the first time this has ever happened, and I don't think that they were expecting retail investors to be able to pull something together and pull this off, but so far they are. So you might say, why don't the hedge funds just hold out long enough until eventually retail investors start cashing out, taking their profits, and the stock price goes down? Like, what goes up must come down, and the hype train can't go on forever, right? Well, the thing with shorting is that you are borrowing stocks from the lender, from the brokerage, and no one's gonna let you borrow anything for free. And so every day that they have these shares borrowed, they're paying interest to the lender for having the shares borrowed. And because they're borrowing billions of dollars in stock, they are paying millions of dollars a day in short interest. They are so desperate to close out these short positions at this point that they are literally trying to do anything and everything to bring the price of the stock down. They are truly in panic mode. And I think actually Melvin Capital, one of the hedge funds, was trying to promote on CNBC that they've closed out their short position. This is they're literally lying. It's fake news. The short position at one point was 140 and now it's 120. The short squeeze hasn't even started yet. Nobody has closed out their short positions. And this has literally turned into a situation where it's a battle of who can hold out longer. The hedge funds are hoping that if they just hold out long enough and pay their bleed out millions of dollars a day in short interest, eventually the retail investors are going to give up. But the retail investors, combined with Wall Street bets and Elon Musk rallying together, they are holding on. If you just go on the subreddit, everything is just hold, hold, hold. People are holding on to millions of dollars in life-changing profits just to make a statement to try and outlast the hedge funds. It's literally like a tug of war at this point of who can last longer. And this is one of the first times in history where the people are finally in power, and the people know this, and they are holding on to their power. And the way that they can hold on to their power in this situation is to hold the stock and not sell it. As long as, in theory, if everybody who currently owns GameStop stock doesn't sell the stock, the shorts will be forced to close their position at this high price. And then in order to close their position, they have to buy the stock at that much higher price. And once they start doing that, that's the squeeze, and that's where things really take off. Because the short position is still over 120%, the squeeze really hasn't happened yet. If you're over 50%, there's still a chance for a short squeeze. There's only been about a 20% reduction in the short interest, so they've been able to close out from 140 to 120, but they really haven't closed out much at all. In theory, if everybody were just to continue holding their GameStop stock, which is hard because there are some people sitting on millions of dollars in profit and they chose not to sell at Friday close and hold through the weekend. That takes, I don't know if I could do that. Words I can't say on YouTube. So in theory, as long as everybody holds their stock, the hedge funds will be forced to close their positions eventually because they can only bleed out so many millions of dollars a day before they cave in. But they're trying to hope that the retail investors cave in before they do. But I think one thing that they're not considering is this whole movement that this has started, that finally the people are in control. I think people are going to hold out longer than they expect them to. And the other thing is, this only works in theory, because if the SEC or stock market regulators come in, or trading platforms start playing games, then this can definitely affect what happens with the stock. And do you really think the hedge funds are just sitting by like, woe is me, we've lost billions of dollars, let's just let the people win? Like, how do they explain to their investors that they just got beaten at their own game by a bunch of people on Reddit? Like, that's embarrassing. So you know that they are doing everything in their power to bring the price of this stock down. They've paid $800,000 to Janet Yellen, who is the US Treasury Secretary, who basically is like the primary advisor to the President of the United States on economic factors. So like, supposedly she has a lot of power in what can happen here. They are literally playing games to try to scare retail investors into selling. And so what they're doing is they're exchanging their shares in very, very rapid succession in order to trick the algorithm to think that the stock is crashing. They're hoping that by retail investors seeing that the stock price is going down really quickly, even though it's not, that people will start getting scared and start cashing out. But so far, people are still holding, and they are literally grasping at straws at this point to do something to get the stock price down. The other thing are trading platforms. So Robinhood enters the chat. So what Robinhood did this Thursday, January 28th, is they restricted buying shares of Gamestop, but they had selling unrestricted. And so this is literal market manipulation by a brokerage, and like, they're not even trying to hide it. They are doing this in plain sight in front of our eyes. Like, this should be illegal. So remember, what's bad for the hedge funds is if the GameStop stock price keeps going up. So if you restrict buying and you make people not able to buy the stock, but you allow people to sell the stock, you have artificially created a balance where selling is increased. And so if there's more sells than buys because buying is restricted, the stock price is going to go down. If you look at the chart on Thursday, the stock price did indeed go down. Not because people didn't want to buy the stock. People were desperate to buy the stock, but they couldn't because Robinhood prevented them from buying. And this is another example of market manipulation. I just happened to catch the CEO on BNN Bloomberg of Robinhood being interviewed, and he looked pale as a ghost. He was just saying a bunch of nonsense about how they did this to protect the investor, like the retail investor, which is like also fake news. Like, he's literally lying. He claimed that he wasn't paid by anybody to make this decision, but you have to wonder, when a decision is made that is so single-handedly in benefit to the hedge funds, like, what's really going on here? I'm not sure, but you know, it makes you raise your eyebrows. This really started making people really mad because everything that is being done by retail investors is perfectly legal. Like, if you want to put all your money into a stock and have the risk of losing it all, that's your choice on a free and open market. It's similarly, if you want to buy a lottery ticket, you know there's a very good chance that you're going to lose the money that you've paid on your lottery ticket. That's your choice. You can do that. I don't think brokerages should be able to prevent you from buying or selling a stock on a free and open market. And this is exactly what Robinhood did. There's a huge outcry and backlash about it. The app has gone down to a 1-star rating. And I think after this all ends, Robinhood is going to lose a lot of customers. Personally, my brokerage, I'm with CIBC Investors Edge, and they put like a warning on when you log in saying, just so you know, these stocks are extremely volatile, like, proceed at your own risk, basically, which I think is a very fair thing for brokerages to do, just in case people are not aware of what's actually going on. But they should not prevent you from being able to buy and sell. And the fact that they did it just like so out there in the open is honestly pretty shocking, and everybody is really mad. And another reason why people are furious is because hedge funds have gotten away with blatant market manipulation basically forever. Like, we've never heard about this on the news. Trading has never been restricted when they try and play games. But when regular people start doing things that disrupts the billionaires, all of a sudden this is media news. It requires regulation and restricted buying. And this has really exposed the reality that the free market is only free until rich people start losing money. And then all of a sudden it's not so free. And this has made people even more mad. And now more people are just buying GameStop stock in solidarity, sort of like against this inequitable, supposed free market. And at this point, I feel like it's more about people making a statement than it is people actually making money. Like, there are so many people pouring money into this stock, realizing that they could lose it all, and are willing to hold the stock until it goes down to $0 just to make a statement. And sometimes when you have these gross inequalities in really anything in life, it takes a severe reaction to actually make a change. And I think this is kind of what's happening right now, and it's poor GameStop stock that is being used as the Muppet here, or the puppet, not the Muppet, as the puppet. So what do I think is going to happen here? Well, basically, we are right now in a tug of war between the people and the billionaires. And of course, you can imagine that the people feel very empowered in the situation that they're in. Somebody has to cave first. It's either going to be the billionaires closing out their short positions for billions of dollars in losses, which they haven't yet because the short float is still over 100%, or it's going to be the people cashing out, about, taking their huge profits and bringing the stock price down. In theory, if everybody were to hold on to their GameStop stock and not sell, eventually the hedge funds will have to close out, and once they start closing these short positions, the stock price could literally go up to infinity. Like, no number is out of the realm of possibility, again, because this was like a perfect storm scenario. Will this happen? I'm not sure. I think, unfortunately, even though what's happening is completely legal and a risk that the hedge funds took being squeezed out, people have capitalized on this and squeezed them out. So there's nothing wrong going on here. The only thing that's wrong is that billionaires are losing money. I still think regulators are probably going to step in and close things down before things get wild. I wouldn't be surprised if we see new rules on shorting stocks. I also think it's a very real possibility that people are going to start cashing out. Like, imagine if you are sitting on millions of dollars in profit as just an average Joe. Like, that's a life-changing amount of money, and I think there's only so long that people are going to be willing to hold and not sell and take the profits. On Friday, Deep Value posted on Reddit that he's up $47 million. He's sitting on $47 million in profit, and he did not sell holding into the weekend. Like, that is insane. Like, I don't know how you do that. That is, I don't know. Hats off to you, my friend. Like, people are definitely holding out longer than I think hedge funds even expect, but this all has to end some way. And realistically, I don't think it's going to be any one scenario. I think it's going to be a combination of, it's going to be sort of like a melting pot of the three of those scenarios. So my final thoughts on this situation are, it has really exposed the reality that this supposed free and open market is not really as free or open as we thought it was as average people. It's only free until billionaires start losing money, and once that happens, the people get cut off. And I hope sincerely, as somebody who loves the stock market, hello, I'm Mrs. Invest, I really hope that regulation comes from this to make it a more fair system for the average retail investor. I don't think any of us are asking for special treatment. I think we're just asking to have a fair shot. And I'm going to have my eyes peeled as to what comes out of this once it's all over. I don't think this is going to be over until at least the end of next week. I mean, but anything could happen, we'll see. But my sincere hope is that this has exposed the fact that us as individuals need to have a fair chance in the markets. And judging by some of the Tweety birds that I'm hearing, regulation may be coming to help protect us as retail investors, and I really hope that's the case. I hope it's just not hot air, but we'll see what happens. And this whole situation has been very interesting. Like I said, this was not a video I intended on making because at first it really had nothing to do with investing. It was all Wall Street bets, but I think the situation is bigger than just GameStop, and it has brought to light a lot of things, and I just really wanted to share my thoughts on the situation and hopefully explain it in a way that if you really are confused and didn't know what was going on, you could make some sense of it. So I will see you guys in the next video, back to the regularly scheduled programming about investing for financial independence. I hope you guys enjoyed this video. Like it, subscribe if you're new, and I will see you guys in the next one. Bye.